Trading price action is useless. Actually, it's worse than useless. It's slowly eating away at your chances of ever becoming a successful trader. In fact, I'd go as far as saying trying to trade price action is the number one reason traders fail. Without exaggeration. Yes, it's that bad. And I don't say this lightly. I say this as a professional trader who takes consistent payouts and makes 5 figures a month. The reason price action is so deadly is because every single trader is taught from day one that price action is king, that if you can just read candles the right way, you'll be profitable. But if you actually look at the stats, the overall trader success rate, it's clear that this approach doesn't work. Now, some might say this is just a skill issue, and that most traders simply aren't as good or experienced with trading price action. And this simply isn't true. You don't need to be a genius or highly skilled to succeed in trading. It's not an exceedingly difficult task to take a few good trades a week and come out positive. But there are entire industries built on making you think it's harder than it really is. So in this video, I'm going to show you exactly why trading price action is a losing game from the start, and the real way to trade profitably over the long term and make serious money. Now, the main reason that trading price action doesn't work in the long run is because price action itself is random. You may have heard this before or you may have not, but I can't emphasize enough how crucially important it is to understand this. Price action is just a visual representation of people buying and selling an asset. If there is more buying volume than selling volume, the price is pushed higher because buyers are willing to pay higher prices, and that will print a green candlestick, right? If the opposite happens, then the price will go down and it'll print a red candlestick. Now, I'm sure you've seen the typical price action patterns that appear everywhere, but if you've actually tried trading them, you realize they aren't that effective. And the reason is that price action has no predictive power. It's simply the reflection of thousands of people buying and selling an asset at once, and there's no way of knowing who or when or how many people will decide to trade the asset at that particular moment. You can't predict the market consistently through price action. Even the largest firms are aware of this. If you've watched The Wolf of Wall Street, I'm sure you'll remember that scene with Matthew McConaughey where he says, "Nobody, whether you're Warren Buffett or you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in circles." And that is absolutely correct. People make the mistake of assuming that price action is a skill issue, that if they studied it more, they would get more skilled at reading the price and become profitable. But even the big dogs at the top don't do it. So not only is it an exceedingly difficult task, it's one that's not worth doing. It's very much like trying to predict when you'll roll a 6 on a pair of dice over and over again. And that's the trap that a lot of traders fall into with trading price action. They keep digging and digging, expecting to find a treasure at the bottom that never appears. Now, this doesn't mean you're absolutely doomed if you've been trying to trade price action, because in certain instances, if you combine price action with other factors like trend and momentum and market structure, you might be able to carve out some sort of edge. Because here's the difference. If you solely used price action to trade, your results would be unreliable and unpredictable, same as the market. You might encounter a win streak or a lose streak or just stay break even. Who knows? You basically don't know what to expect in terms of profit for the next week or month or year. Now, if you use other factors to confirm price action like trend and momentum, then you've moved up a notch. You're not entirely firing blind, and you have a few repeatable factors that constitute an edge. You have some structure. This would put you somewhere in the upper middle range of traders. Traders who only trade price action and have no structure occupy the bulk of the lower range. There aren't many traders who can trade this way and come out consistently profitable, especially on a longer time frame. You'd have to be extremely gifted to overcome the randomness of the market and sniff out accurate setups over and over like this. Now, if you trade with some structure, that increases your chances a little bit. Some traders who trade like this are profitable, others are not. You're not at the top just yet. And that might look something like this. The price action trader might just trade whatever, whenever, and get completely random results. There is no way for him to build a career out of this or stay profitable over the long term. The structured trader will have more structure. So let's say, for example, he might only trade ES futures from 9:30 a.m. to 11:30 a.m. And if the market is in an uptrend, he'll look to buy dips. And if it's in a downtrend, he'll look to sell rips. Now, this is infinitely better than the price action trader because you're only trading a certain time frame, and you have rules in place that make this a somewhat repeatable process. You're less likely to be blown away by the randomness of the markets, and you can be consistently profitable with this. But there's a problem. Most traders already trade this way, and many are still unprofitable. You might have an edge, but it's very hard to maintain. Sure, you have more structure and discipline by trading this way, like most traders do, but only the most skilled and talented out of this group can truly stay profitable in the long term. So is it just a skill issue? Do you need to trade for years and just grind your way up? And even after all that, you still might not make it? Well, no. That is most traders' realities, unfortunately. But it's not about simply grinding your way to the top and outworking everyone. In fact, the most profitable traders work way less than unprofitable traders. So what's the catch? How do you get to that upper level where the profit comes to you effortlessly and you don't need to grind for it? Here's the thing. There are no trade-offs when it comes to strategies. Some strategies are just better in every way possible with no drawbacks or disadvantages compared to another. We see that with price action traders and structure traders. Structure is better in every way. It's more time efficient, more consistent, it's simpler, and it's more scalable. But if you truly want to play the game at the highest level and make trading better for you in every way, you'll need a system that takes structure one step further. Because look, structure is good. It gives you rules, it gives you some consistency, and it's a lot better than chasing random candles. But it still leaves too much open to interpretation, too many gray areas. What you need is something mechanical, something that tells you exactly where to trade, when to trade, and how to manage that trade without second-guessing yourself. Price action itself is deceiving and unreliable. Adding some structure to it helps, but you still need to go out there and read candlesticks and read the market. We don't want to be working that hard, and we don't need to be working that hard. You don't want to be on the screen for hours a day, looking for setups and watching every second of it and stressing. Then you often interrupt yourself anyway and screw up a potentially good move. And the way you fix all this is by implementing a level-to-level system. We want to be completely independent from price action and rely entirely on structure. In fact, we should be able to look at just a line chart and be profitable from that. That will make our results more predictable, simple, and less stressful, which makes you much more confident in your execution abilities, which means you'll execute better and get better results. Then you'll get even more confident in your execution, trade with more size, and get even better results. See what I mean? It's an upward spiral. You get exponentially more successful the more you detach yourself from price action because you're fully committed to the process and essentially turn trading into an automated business. And that's how you succeed and grow in the long term with less stress, much less work, and much better results. All while those price action traders can't even get off the ground. Although if we're serious about this, we need to have some elite structure. We can't make good trading decisions with mediocre structure. If you really want to grow, you need a structure that's airtight. A framework so clear and repeatable that it doesn't matter if you're tired, distracted, or even a little off your game. The system still carries you. Instead of trying to define dips and rips in the middle of the chart, you need to focus on the places where the market is forced to make a decision. The areas where big money actually stepped in before. That's where supply and demand levels come in. These are zones of high liquidity, areas on the chart where institutions created an imbalance, where volume surged, and where price is very likely to return again. And once you see the market for what it really is, a constant search for liquidity, the path becomes much simpler. Price doesn't wander aimlessly. It moves from one liquidity pocket to the next, from level to level. And what makes this so powerful and effective is that you know where the price is going next. So if you're trading price action regularly, it's difficult to map out exactly where you should enter and where you should target, because you don't know where this specific move will end. And that was the problem we were faced with before: vagueness. If you enter here, you're not sure how far the market might go against you before moving in your favor. You're not sure exactly how wide to place your stop loss. Everything becomes subjective and random. And that's our enemy. But now that you know how the price moves and where it's going, everything becomes a lot easier. You know that the price moves from one level to the next. So you know that if you enter here, you only have two possibilities. It will either go to the level above or the level below. And now price action becomes irrelevant. Because if I have a bearish bias from the trend and momentum, then it doesn't matter what the price does here. I'm looking for a move from this level to this level. And that's it. So it can do whatever it wants here, and it can do whatever it wants in between the levels. So price action that would normally scare off other traders and tank their P&L has no effect on me. I know that if the price moves to the level above, whatever happens in between, my trade is valid and correct. And if price moves to the level below, my trade is invalid and will get stopped out. Simple as that. Now repeat this process over hundreds of trades. Even if you somehow get a string of losses, they're contained and won't blow you up. You don't even need to get half your trades right to be profitable. And it's much easier to tilt the odds in your favor anyway, with even something as simple as trend following. I'll link the video here where I explain exactly how to map out all these levels in detail. It's crucial to get this part right. So if you look at the process of the other traders, they'll open their chart, then monitor the screen until they see a potential trade appear, then enter it and watch it the entire time until it hits stop or target. Stress levels are through the roof the entire time, and trading is just an uncomfortable experience. And this is assuming you're always on top of your game and don't make any mistakes in between, which you will. But if you trade level to level, your process looks a little different. You set an alert at a supply and demand level, then simply close your screen until the alert hits. Once the alert hits, you get notified and open your screen. You take a few minutes to assess market conditions and see if everything aligns with your setup. Now for this specific process, I use the LCE model, and I'll link a video explaining that process in detail here. But once you take a few minutes to analyze if the market fits your conditions, you then decide whether you want to enter a trade or not. If you don't, then you simply set more alerts at the next level and close your screen. And if it does fit the entry criteria, then you just enter and set your stop and target, which are already predetermined, and then simply close your screen again and let it play out. Stress levels are at a minimum, screen time is at a minimum, and you're way more likely to profit on this trade since you physically can't interfere. A lot of times your original idea was right, but you executed it badly. And you're way more likely to profit long term because you can easily maintain consistency with a strategy like this and keep your psychology intact. That's how powerful the right structure is. So here's the bottom line. Trading price action is a dead end. Structure is better, but it's not enough. If you really want to win long term, you need elite structure. A level-to-level framework, like LCE, that makes trading mechanical, simple, and scalable. So focus less on trying to master random price action and more on getting structure right, because that'll be where most of your returns come from. And when you do that consistently, your trading stops feeling random. It starts to feel like running a business. And that's the way to truly unlock that upper echelon of trading that makes it seem easy. That's why I don't sit at the screen all day. I don't stress over every candle. I just map my levels, wait for confirmation, and execute when the system says so. And that's not just how I trade. It's exactly what I help other traders build for themselves. So if you want to see the full breakdown of how I apply this day to day, and then how you can use it in your own trading, I put together a video that walks you through everything step by step. The link's in the description if you want to check it out. In the meantime, if this video opened your eyes, drop a like, hit subscribe, and I'll see you in the next one.